Joining us now for more color on Apple's first quarter results. Let's bring in New Street Research Technology Infrastructure Analyst Antoine Chkaiban. Antoine, good to see you. So the numbers are out. Interested to get your first take on the report, Antoine. What do you make of them?
Hi, Josh. Good to see you again. So, yes, iPhone revenues were down 1% year over year. So that's slightly below consensus, and that implies units down mid-single digits. As you mentioned, the key will be the color the company will provide for the March quarter, and Apple usually provides guidance for the following quarter on the call. So we remain concerned about the next couple of quarters. And that's for a number of reasons. First, we're not convinced that on-device AI will enable game-changing user experiences because the hardware is not game-changing. When you think about it, Apple Intelligence features that are tightly integrated with the operating system, with iOS, have not really gotten great feedback so far. And the top models are anyway already available on most iPhones through various apps. So do users really need to upgrade to use these technologies? Not really. And then on top of that, you have elongating replacement cycles. You have the fact that share gains in China, which have been a tailwind in the past, have now stalled. And so, yes, we expect downside to consensus for iPhone in the March quarter, the remainder of fiscal 25, and we expect color supporting that view on the call.
Antoine, let's dig into China a little bit more there, where sales fell by 11%. What do you think is the issue there? I mean, and it sounds like you don't think Apple Intelligence will help. So excluding the effect of that for a moment, because we also don't know when it will be approved to roll out on phones there, what is the issue in China? Is it a macro issue or is it a competitive one?
I think it's more a competitive one because in the past, when Huawei got phased out like a few years ago, Apple was able to gain a lot of share in China because there was no alternative to Huawei in the very high end. Samsung is not very present in China. And so that was a huge tailwind for Apple. And now that tailwind is reversing because now you see a number of players who have very competitive offerings in the high end who are basically competing with the iPhone. And so that's what's happening right now.
Antoine, another theme I want to get your take on is DeepSeek and this idea that you created a model at much lower cost than American rivals. And when I speak to some analysts, Antoine, they wonder, well, could that mean, app makers, software firms can create that many more AI experiences? And the idea being, could that long-term be a tailwind for Apple and the upgrade cycle? How are you thinking about that?
So, yes, when you think about, first of all, let's put a bit of context on the architecture of Apple Intelligence. So first, there's a large language model and a diffusion model running on the device that's handling like natural language interactions and generating images, interacting with like a demanding index, providing user context to those models. And second, there are some additional models running in the cloud. And those can be either Apple's own models or OpenAI's models. But simply put, on-device models will deal with maybe your diary and your address book, but they will call their cloud-based older brothers for tasks requiring broader knowledge and capabilities. And so now that we have that context, if you take like all the efficiency that DeepSeek and like all the news flow of recent days demonstrates, what that tells you is that you're still going to have a much more powerful model running in the cloud. Okay, even if you can make both more efficient, you're still going to have a more powerful model running in the cloud, and that model will still be required for broader knowledge, broader capabilities. And so I would say our conclusion here for Apple is no different than the conclusion we've provided for the broader tech supply chain, which is that if you have more compute available because you're simply optimizing your models, you're making them run more efficiently with algorithmic optimization, you're going to use that additional compute for better use cases. And you're still going to have a larger model running in the cloud. And so for us, what that simply means is that you're still going to have this kind of architecture with a more powerful model running in the cloud, and that doesn't change any competitive dynamics there, so to say.
So you don't need a new hardware, I guess, in other words. I want to ask Antoine about services for a moment, because that's one area where it looks like they beat estimates by a little bit. By my math, they saw revenue in the services segment rise by about 14%. For a while there, the narrative was, well, services is doing well at least. That's something that, that's going to continue to sort of chug along, be an engine for Apple. Is that enough at this point?
So I think, yes, services are probably, I mean, they're at an all-time high. That's, of course, driven by like a collection of businesses, and they will likely continue to grow, in double digits in aggregate, but I don't really see much room for an acceleration here. Bottom line is, yes, you have like that. Those challenges that Apple is facing in hardware, in particular in iPhone, services that are unlikely to accelerate. So yes, I don't think that's going to save the game. I think maybe double digits growth is already very strong growth, and I don't really see much room there for an acceleration.
Antoine, great to have that instant reaction analysis and insight. Thank you so much for being on. Appreciate it.